You are not being taxed based on what you earned. You are being taxed based on what you know. And the terrifying part is that the IRS designed it that way. Right now, somewhere in this country, a nurse making $60,000 a year is paying a higher effective tax rate than a man worth $400 million. Not because the system is broken, because it is working exactly the way it was built to work. And the people who built it are not the ones losing sleep over it. What I'm going to show you today is not political, it is not a complaint, it is a map, a step-by-step breakdown of how the IRS actually treats you depending on how much money you have. And once you see it, you cannot unsee it. We are going from $0 to $100 million, and every level has a completely different set of rules. Same country, same IRS, completely different game. Let us start at the bottom and work our way up. Level 1, $0 to $30,000 a year. If you are in this range, the IRS keeps things simple. Simple for them, not for you. You are likely working a job where taxes are taken out of every single paycheck before you ever touch the money. You don't choose when to pay, you don't decide how much to set aside, it just disappears. This is called withholding, and it was designed to make tax collection automatic, convenient for the government. You have almost no control. Your income at this level is almost entirely what the IRS calls earned income. That means you traded your time for money, and earned income is taxed at the highest rates available. You don't get special treatment for how your money was made. You showed up, you worked, you pay. Now, the standard deduction exists, and it does help. For a single filer, it removes a chunk of your income from being taxed at all. But after that, there's not much room to move. You're not hiring a tax strategist. You're probably using free tax software or going to a chain preparer who files the same return in 20 minutes. Refunds feel like winning at this level, but here's the thing most people never realize. A refund means you overpaid the government all year and they held your money without paying you a single dollar in interest. It's not a bonus, it's your own money coming back to you late. People at this level pay taxes and move on. There's no strategy because there's almost nothing to strategize with. Level 2, $30,000 to $80,000 a year. This is where most working Americans live. Teachers, nurses, mechanics, office workers, small business employees. And this is where the tax system starts to feel uncomfortable if you pay close attention. You are now deep in the middle tax brackets. Federal income tax, state income tax in most states, Social Security tax, Medicare tax. By the time everything is taken out, you're keeping somewhere around 65 to 75 cents of every dollar, depending on where you live. The Social Security tax is one that people in this bracket rarely stop to think about. You pay 6.2% of your income into Social Security. Your employer pays another 6.2% on your behalf. That's 12.4% of your labor going into one program before you even get to income tax. Here's the part that matters. That Social Security tax has a cap. In 2024, it only applies to the first $168,000 of income. So, if you make $60,000, you pay Social Security tax on every dollar you earned. If someone makes $2 million, they pay Social Security tax on the first $168,000 and nothing on the rest. The person earning less pays a higher percentage of their total income into Social Security. That's not a glitch, that's the design. At this level, you start hearing about deductions. The mortgage interest deduction, the student loan interest deduction, retirement contributions through a 401k or IRA. These are real tools and they do help, but the savings are modest because the income is modest. If you contribute $5,000 to a retirement account and you're in the 22% bracket, you save about $1,100 in taxes. Helpful, not life-changing. Level 3, $80,000 to $100,000 a year. Now things get interesting. You are a high earner by most household measures. You are probably in the 24% federal bracket or approaching the 32% bracket. You're making good money and you're starting to feel it on your return. This is the level where people first discover that working harder doesn't always mean keeping more. You get a raise, you move into the next bracket, and people panic thinking they'll somehow take home less. That's the bracket myth, and it's one of the most misunderstood things in personal finance. Moving into a higher bracket doesn't mean all of your income gets taxed at the higher rate. Only the dollars above the threshold get the higher rate. The rest stays taxed exactly the same. But what is true at this level is that your marginal rate now means meaningful. Every extra dollar you earn in overtime, freelance work, or a bonus gets taxed at your highest bracket. So, yes, you work more and you keep a smaller percentage of what you added. This is the income range where tax strategy starts to actually matter. Maxing out your 401k, using a health savings account if you qualify, timing deductions, understanding what counts as a business expense if you have any self-employment income. A person at this level who understands the tax code is in a meaningfully better position than someone at this level who does not. The gap starts forming here, not at the top, right here in the middle upper range. There's also a cliff at around $150,000 where certain deductions and credits begin to phase out. Your ability to contribute directly to a Roth IRA starts to disappear. Some education credits vanish. The IRS calls them phase-outs. What that means in practice is that the more you earn at this level, the fewer benefits you can access. You make too much for the safety net tools, but you don't make enough for the advanced strategies. This is the squeeze zone. Level 4. $200,000 to $1 million a year. Welcome to a different conversation. At this level, your accountant is no longer just filing your taxes, they're planning your taxes. There's a difference. Filing is looking backward at what happened. Planning is looking forward and making decisions all year long to control what your return will show before you ever get there. You are now in the top tax brackets. The 35 or 37% federal rate applies to portions of your income. But here's where it gets important. People at this level are no longer living entirely off of salary. They have investments, they have business income, they have assets generating returns, and different types of income get taxed at completely different rates. If you sell a stock you've held for more than a year, the profit is taxed as long-term capital gains. The federal rate on long-term capital gains for someone in this income range is 20%. Compare that to the 37% rate on ordinary earned income. Same dollars, different category, different tax. This is the moment when the system begins to favor people who own things over people who earn things. A person who earns $400,000 from a salary pays at the highest ordinary income rates on most of that. A person who receives $400,000 from long-term investment gains pays at the lower capital gains rate on most of that. The IRS sees these as fundamentally different types of income and taxes them accordingly. At this level, people are also running entities, S-corporations, LLCs. They're not just individuals filing a return anymore. The business structure itself becomes a tax tool. Expenses that might be personal for a salaried employee become legitimate business deductions for someone running an entity, a home office, the vehicle, travel with a business purpose, health insurance premiums. The line between personal and business starts to blur in ways that are perfectly legal and enormously advantageous. People at $200,000 to $1 million also start using things like defined business pension plans if they're self-employed. These allow contributions far beyond what a standard 401k allows. Some business owners at this level can shelter well over $100,000 of income per year in retirement accounts. That's $100,000 the IRS can't touch until retirement. This level is where the game truly shifts. Below this line, the system processes you. Above this line, you start to negotiate with it. If this opened your eyes to something you hadn't fully understood before, the next video is going to take this even further. I think it might be one of the most important things I've put on this channel. Make sure you watch it.